Welcome to the Financial Planning for Canadian Business Owners podcast. You will hear about industry insights with award-winning financial planner and entrepreneur Jason Pereira. Through the interviews with different experts with their stories and advice, you will learn how you can navigate the challenges of being an entrepreneur, plan for success, and make the most of your business and life. And now, your host, Jason Pereira.
Hello and welcome to Fintech Impact. I'm your host, Jason Pereira. Today on the show is our 2022 year in review, where I have brought on my co-conspirator, Guy Anderson, yet again to have a conversation about what happened in this past year's 51 episodes, other than this one. So with that, here's my conversation with Guy. Guy, thanks for doing this again.
Happy to be here, Jason.
So yeah, another year in the can, unbelievably.
Yeah, I'm impressed. This is how many years is this? 4?
I lost track, honestly. I'm going to guess about 4, but I mean, at this point, it semi-runs itself. I get more inbound inquiries than I do have to go looking for anything. So it's kind of nice.
That's impressive. There doesn't seem to be any lack of content out there. You keep seeming to bring in, new providers and new technologies. There never seems to be an end of ideas and solutions out there. So that's a good problem to have, I think.
Absolutely. Well, I mean, it's never ending. I will say that I've noticed some, things are, I'd say in the last year, things are a little bit different compared to the pace or what people are working on than I've seen in previous years. But again, we can jump into that as we start with the questions.
Very good. Okay, let's get into it then. So let's start right off the top. What was your top pick for the most interesting fintech solution for 2022?
So, when the year was coming up, I got to say that there was nothing that truly, really just broke I've had a couple of years where like the new thing broke my brain. Like it was just like, this is so different, or this is so revolutionary that I am like, this is changing how you would do something. And I will say that this year, I didn't really experience that like, oh my God moment. I think that the closest thing to the most revolutionary, coolest thing I've seen wasn't in fintech. And that is GPT chat, which I'm sure a lot of people are played with now. And we'll get into that a little bit later and what that means. But in terms of the context of the podcast, I don't think that I saw anything that was truly like earth shattering. But what I will say that I thought was really, really impressive is I saw a lot of really good execution on really fundamental issues that advisors faced. And I saw some really, I think some products out there that are straightforward, but at the same time, are going to basically solve some really good problems for us. So just to give you some ideas of some of my kind of favorite ones to pick out of that, Nudge was the first one in January. And this is a tool for automating client communication and collaboration and basically just kind of poking your client and reminding them to do things or basically setting up those reminders so that they're automatic. They don't have to do it. Oh, you need to fund your account by this amount. Here's a reminder. Oh, by the way, this is expiring in 6 months. Here you go. Like we should start this. So just the entire, like taking the small pedantic nagging that we have to do on some occasions out of the equation. And I think that was truly, a fundamental need of the workload that basically they're improving it. And that also kind of spins off to the one I think is also, was a really good execution of a fundamental issue. And it was Hubley. Hubley, I spoke to back in March. And since then, I think there's been a lot of buzz in the US RIA market about them. And what they are is picture a Trello or any other kind of like checklist or process mapping system, but one that's designed specifically for financial advisors. And the benefit of that is that when you're that narrow a vertical, you can build tools or build integrations or solve problems specifically for that segment of the market. And that's what I think they've done incredibly well. And they, even down to having template libraries on this. So you can absolutely build a truly repeatable, scalable process with checklists that basically are going to enable your workflows like never before, like in a very easy way to build. And I will say that, when they first came in with the idea a couple of years ago, I was like, well, there's other systems for doing this, let's see what you come up with. And they showed me, I'm like, damn, you nailed it. And, I was just speaking at the KitSys Summit like a week ago, and someone mentioned Hubley in the chat. And then from that point on, it was like 3/4 of the conversation was about Hubley. It didn't matter what was being presented. It was quite amusing. So I saw that one. And I think those were kind of like the two that stood out as like okay, these are fundamental issues that are being really well solved. There's a couple of other ones I will say that, document storage and sharing. So one of the ones that came up was ReadyWhen. Now, full disclosure, I am a advisor and share owner of a competitor called Sideware, who's been on this show also. And frankly, they're both working to solve issues surrounding document collaboration and whatnot. ReadyWhen more focused on estates, but Sideware really being the kind of really awesome execution on how you have a shared document folder, as well as the ability to request information and manage data clients. And then, one last one, and this is, basically a painful thing that we're all going to go through at some point, is Estateably. And that was a software for basically ensuring that everything involved with settling an estate is done is done first and foremost, but also as fast and as painlessly as possible. So again, fundamental problems, nothing revolutionary, but there's still, it just reminded me, there's still a lot of low-hanging fruit in the fintech space.
So it's interesting to bring that up because that's one of the things that we've talked about before is about how narrow these products can be. But how broad can fintech be too? Because fintech, the definition is, broadly speaking, it's financial technology. And, I've heard in a couple of your podcasts where you've interviewed people that technically wasn't fintech, but it was, technology applied.
Yeah.
Right. So how would you describe that in terms of, what you've seen this year, the narrow focus stuff? Then how broadly speaking can fintech really be?
Yeah, so I think it's in keeping with the trend that is the reason fintech exists, right? So we've had these different kind of regime changes or eras of technology. We have the one where we had first and foremost, it was just the invention of computers in general, right? So you had these giant computers that filled rooms and needed punch cards and did rudimentary calculations, but did them better than humans, right? So you had the kind of the hardware era that started off, and then that eventually has gotten to where it is today. Then you had the kind of real explosion in the software era in the in the 80s and 90s and the early 2000s, and there was the internet era, and all of these things led to the creation of very broad, very kind of multi-purpose solutions. Microsoft Office, Salesforce, and other CRMs, things that were designed to service general business problems, right? Then you had, the general world was done. Like the general play, that land grab was over, more or less, and still to this day, more or less is, unless there's a new infrastructure that comes along. And then it became, okay, segmentation around how do we solve specific verticals? So that was fintech, that's med tech, that's reg tech. You name anything, like any sector now. There's so the sector of software for running marijuana grow ops legally. That's the green grow tech or bud tech, whatever it is. So there's different basically acronyms or prefixes for technology across every sector. So you start to see, again, this is when my podcast came out, was the earlier to mid end of the explosion, was all of this technology being specifically said, no, we're building specifically for this sector of the economy. And now, well, we've had but I think what happened there was it was the bigger issues that were looked at first. Now we're looking at the smaller pain in the butt nuances of this, right? Where, we've solved, okay, congratulations, you solved, I've got better reporting systems, I've got better rebalancing systems, I've got, better illustration systems for insurance, whatever it might be. But now we're getting down to the administrative side of my life still kind of sucks. How do I make that work? How do I get down to the fundamental day-to-day problems and make that workload just shrink even further? And I think that's where we are. We're at the minutia stage now.
Right. So what are you seeing on the advisor side? Because you and I are both advisors, and fintech is going to revolutionize and it's already started to revolutionize our business. But where do you see it impacting advisors versus all the other aspects of the fintech space? Because the advisor community is a small component of fintech in general, right?
Yeah. So I think it enables the reverse to happen. Whereas, historically, the distribution of financial products followed specific channels where you typically would go to one person for one thing, right? Your investment guy, your insurance guy, all that. And we've seen that slowly expand out with multi-licensing. But I think what it does is that it continues to broaden the understanding for what financial services can actually do. right, can actually all encompass. And what I mean by that is, first and foremost, the number of financial decisions that people face on a day-to-day basis is increasing like almost exponentially, right? You go and shop for Christmas gifts right now online, and there's a very good chance that you will be offered an installment plan through something like Afterpay. That is a financing decision. And if you don't do that, I mean, if you're in the US, Apple will slap that over any purchase you do on their platform, right? Like, oh, you want to pay for that? Yeah, so great. Here's one as well. So, the buy now, pay later is probably, it's my most hated but best example of embedded finance, right? And the number of decisions that are that number is just going to continue to increase, where what used to be a simple transaction is now a financing decision, right? And that challenge to consumers is just going to continue to increase. And what's going to happen at some point, and this is where the technology and digitization and making our current, the current stuff we used to do 10 years ago, super easy, slick, fast, a lot easier to handle. People have said, a lot of technologists and engineers are like, oh, that means advisors are going to handle more clients. No, it doesn't. It doesn't, because at the end of the day, our brains aren't upgraded. We can only handle so many relationships. And no one wants a relationship where they're paying someone good money for them to basically say, oh, hold on a sec, let me look at my CRM to remember who you are. Right? No one wants that. They want intimacy. So what's going to happen is it allows us to service on a much broader basis. I mean, what we're missing is a future where is a paradigm right now where I have, as a client, an investment decision to make, or a financing decision, or whatever decision it is. And I've been coached to know that, I'm being asked, do I want to finance this over 12 months? I've been coached to ask my advisor. And, on that same phone that I'm doing that purchase now, I flip over and I basically go to my dedicated chat, and I talk to my advisor. I'm like, hey, I decided to buy this earlier than we planned. It's being offered as a financing option. Should I be doing it? Yes, no. And within a couple minutes, maybe I'm sitting on my computer and I get pinged right away, and that person's information contextually comes up, showing me their last financial plan, showing me their up-to-date banking information, all that sort of stuff. And I can make a informed recommendation around that. Now, that's a very simplified example around buying something online. But again, like, imagine just in time, in place, when you needed financial advice. And I think that is the world that we are slowly moving towards. Someone who understands you deeply on a lot of levels, but someone who's also now there who's moving down the food chain of decisions. It's no longer just about the big things like retirement and housing and kids' education. It starts to move into, like, and I've done this for my clients, negotiating car leases, and then even down further and further, smaller and smaller transactional based stuff. Now, again, there's a point at which diminishing marginal returns kicks in, and do they have to, should I reload my Starbucks card is not a question I should be dealing with, right? But at the end of the day, there are other ways and little pieces of knowledge that we have that we can definitely help people on.
So that raises an interesting question, because, like, how much of this fintech actually filters down into the hands of individuals, and what impact does that have on the advisory business? So, like, how much work does that take away? You know what I mean? It's how much can the client do because Nudge is now taken over part of our role, type thing.
Yeah, but here's the thing: it's like you're never look. Maybe I'm wrong about the following statement, but I don't think I am. There's only a certain type of person who's going to listen to a robot running their financial life, start to finish. That's the reality of it, right? At the end of the day, the level of human of customization around human gray matter that needs to exist, that takes into consideration your family dynamics, your stage in career, your anxieties, your hopes, your dreams, your personal preferences, all that is very difficult for a computer to jive with everything else. If anything, I think that there's going to be all the heavy lifting, right? I still remember a lot of times, back in the day, advisors, I don't hear this much anymore. It's like, well, look at all this work associated with opening accounts and investing your money. I mean, that's why you're paying me. I'm like, well, that is the worst value proposition I've ever seen, is filling out paperwork. But some people literally used to argue that. The reality is that I think everything that you can associate with the quote unquote heavy lifting, anything that's repetitive, anything that is basically that is just information data transfers, that sort of stuff all becomes automated slowly over time. Now, it's one of these things where it is a slow process, right? And I'll use but sooner or later you get there and you're like, wow, we're here. I'll use the example of raising my kid. My kid's going to be, in a couple of weeks, he's going to be 8. And I'm sitting here going, and like every parent, I'm sitting here going like, how did this happen so quickly? Right. But really it's been 8 years. And in context, 8 years is a long period of time when you think about it. So we don't see the changes happen day to day, but sooner or later you look back and realize how far you come. And that's the world we're heading to, is that, hey, all of these integrations, all this stuff that will eventually come together. And it's still, don't get me wrong, it's not going to be easy. Data passing between two places is still a difficulty. Canada's still way behind on this stuff, but there is incremental gain happening every year. And we'll get to a point where, I literally, client calls me, boom, their situation pops up. I have a dashboard of their life right in front of me, right? And in which case, now the conversation, when you think about the stuff that we used to, the advisor value it was like, I'm going to sell you something. I'm going to now advise you on what you should have, as opposed to just selling you something. I'm going to integrate all this into a plan. All of that work goes from being a full day project to a automated project, with the last mile that takes less than an hour being handled by the advisor. That's where it goes. And then what do we do with that consumption, with that expansion of time? Well, the reality is that the differentiation will then, the entire service and value added proposition and coaching and behavioral coaching and all that stuff that we keep on talking about being the future of this business. That's going to be the differentiation point, because that is not going to be what is basically done. And anyone who still has a transactional mindset and is basically in this business, let's call them in their 40s, and thinks that they're going to be in their 60s and still it's going to be the same business, I think you're going to lose that bet. So start thinking about getting out of that transactional mindset.
So I'm glad you mentioned that, because I see a lot of efficiencies coming to the business and building up deeper relationships with your clients, and just being able to be better, and just being better advisors long term. So you brought this up earlier, and it's probably not fintech per se, but what are your thoughts on this GPT chat? Like, where do you think this? Is there an overlap with fintech and our industry?
So, for those of you who weren't aware of this, GPT chat, I haven't seen it. We're talking in December now. It's been a couple of weeks since this kind of hit, and it got pretty popular for a while, but not everybody's still seen it. GPT chat is is a function of GPT-3, which is a general purpose artificial intelligence that has been being experimented with, and now they've kind of opened it up and allow people to ask whatever question they want of it, or to ask it to compose whatever text it wants. So the reality is that I experimented with this the other day, and I basically said, I joked around with a couple of funny things, like, sarcastically, like, write a tweet about why the 4% rule is awesome. And I was just like, yeah, it was a joke. Or write a rule on, write a tweet on how awesome it is to use whole life insurance as a retirement product. So it was scary how accurate the sales pitches were. I mean, it's not scary because it's copying what it sees in the world, but it's unfortunate that that's what it was doing. But then I ran a test, because, I do a lot of content, and I said, okay, write a blog post on the different ways to register a business in Canada, the pros, cons, and costs associated with it. And it came back with 1,000-word article that, man, did it pretty much nail it. Like, the broad strokes were all there. The price ranges were there. It kind of summarized it all pretty well. There was very little nuance. It didn't get into human considerations for like other things you would want to consider when you're picking one of these things, or investment strategies, of course, but I didn't ask it to do that. And I thought to myself, wow, that took 10 seconds. So now that is incredible. And that is something that is, disruptive potentially to anyone in content generation. And I would say, unfortunately, going to result in a lot more computer generated content that's probably fluff out there that is not of actual meaning, but it's just, most of the stuff that's out there that's written is largely fluff. So how does it impact us? Well, yet another function that advisors kind of have said, you can always come to me with general questions about something, right? Like, I've always said that, like, just simply being able to tell someone how an RSP works is a very low value, right? How a TFSA works is a very low value, a 401k rollover, all of that same stuff. Being able, think of this as a better version than Google, right? Instead of Google gives you a list of here's possible answers. This one gives you one answer. Now, that one answer, unfortunately, may not be 100% correct, but it sure as hell sounds it. So, in fact, I listened to a commentator refer to it as the most confident algorithm he's ever seen. But the reality is, so start thinking about that. How does that impact us? The creation of content for marketing, for client communication, for answering questions, for now that's just the beginning. Think about that as a tool and application that when it's pointed towards large companies that have databases of protocols and procedures and how things get done and libraries on how things work, being able to scan all that and actually be the service agent. So this is another potential for heavy lifting that gets removed from the advisor world, right? It is, I'll give you an example. Investment policy statements. In theory, everybody should have one, right? Very few advisors have ever composed one as far as I can see. I have a company template that I use, but, a lot of times people just like the most common answer I hear to things is, well, I don't know how to start. Or, people don't want to spend a cognitive burden in designing one of these things. Now, imagine if I said I looked up a list of things that had to be in a investment policy statement in terms of like the general templating stuff, and just typed in, okay, write this many words on how, this works. Boom, copy paste. You're not 100% of the way there, but it is a good first draft potentially, right? So you think about all the text-based communications we do and education we do, and think about how that can take away some of that burden. Again, now your choice is marginal. When you consume that benefit, do you invest that in expanding your client base, or do you expand that in servicing and providing deeper value further up the food chain that's necessary? So again, all the stuff that's more generic is the first thing to get disrupted.
Yeah, so low-hanging fruit, right?
Absolutely.
Yeah. All right, so again, a little bit of a tangent here. I don't think we can talk about the year in review without talking about the recent blow-up of FTX and Bankman-Fried. So indulge me here, and what are your takes on that in the whole crypto world? Because arguably crypto is fintech in some regards, right?
Crypto is a technology that is unfortunately that is useful, and unfortunately that use is lost in rampant speculation in most cases. So yes, FTX. Who would have thought people like us in traditional markets saying, "Hey, be careful with this stuff. This is highly speculative, unregulated, all this other stuff." And everybody throws it back at you saying, well, it should be unregulated because, lack of central authority, all this other stuff. Well, now you're seeing the other side of it. The other side of it is that, when everybody thinks that this is, it's all fun and games when everybody's making money. When the frauds actually get exposed, the pitchforks come out. And, we're having this conversation a couple of days after SBF got arrested. Rightly so. They got him dead to rights on a couple of things, but nevertheless, I posted like what the asset base in comparison to the loans that they had issued were on Twitter. And someone said, well, correct me if I'm wrong, isn't this how banks operate? And my response was, FTX wasn't a bank. It's an exchange. Fractional reserve banking is not something it should be doing. There's no central bank backing it up. But these are nuances lost upon people, unfortunately, a lot of people lost money, and I feel sorry for all of them except for Kevin O'Leary for various reasons. Who's now crying?
It was $15 million, didn't he?
No. He got paid $15 million, but he hasn't disclosed what he invested in them. And given how broken up he looks about this, I'm guessing it's more than $15 million. Anyway, so that said, a lot of people lost a lot of money. I feel bad for the people who did, but this was always caveat emptor. Right. This was, and frankly, in a lot of ways, the crypto purists will tell you your mistake was leaving it on someone else's wallet. And there's some truth to that. If you had that in your own wallet, you would have been more secure. But I think that this is, look, any new technology is always met by a bunch of scam artists, a bunch of scam artists try to take advantage of it off the bat because it's new and novel and a quick way to make a buck. And of course there are larger scale frauds that happen. I mean, let's look at what happened during the great train explosion or the train expansions in the early 1900s and late 1800s. I mean, Canada's famous for the Grand Trunk Railway scam that happened, right? Like there's large scale frauds that get away from things, and it's in large part because there are no rules in these places, right? And people will argue again, crypto, having no rules was part of the entire design of it, but now you've seen the dark side of that. And my concern is always, as I said, I've made statements like I love, part of me loves blockchain and hates Bitcoin. And it's because all this rampant speculation and fraud and all this stuff gets away from the pure fundamental technology that is there, that is of use, and it is of absolutely of value. So, I think we're through this part of a natural hype cycle where these sorts of things happen. And out of this, there will be some forms of regulation that happen on a jurisdictional basis. And that's good. That's good because, frankly, I am not one who believes in giving people the freedom to blow themselves up. You want to blow, you should, but those who are not intending to blow themselves up or too naive to understand that it is potentially going to blow them up need some base level protection, because as a society, we all pay for their losses in the end.
All right. So here we are, 2 weeks away from the end of the end of the year. 2023 is upon us. Hopefully, all this the worst of the markets, we will leave behind, etc. But in terms of what you're seeing for 2023, you've already identified the fact that people are reaching out to you. This doesn't seem to be any lack of content. But what excites you in terms of what you've got lined up for 2023 for the FinTech podcast?
Yeah, so a lot of interesting stuff coming up. I mean, I'm literally booked for several weeks out. I've got a couple of interesting use cases around artificial intelligence and machine learning. I have a very, again, fundamental problem when it comes to insurance underwriting, that this company's been so wildly successful in the UK. Like, more than 20% of policies are underwritten through them. It's just, I almost fell off my chair when I heard it. Wow. I have, other ones that are coming up, some interesting research from academics. I'm going to have a couple of previous guests on the show come back and talk about some of the really explosive growth they've had and the challenges that's made, and, things that they've learned. And then in addition to that, I got to tell you, one of the ones that excites me, this is one of the ones that I won't say it didn't break. There's a couple of interesting ones coming up. So I've got tentative bookings right now. I've got one recorded that'll be coming out, let's see, early January, which is Lumient, which got along with the CEO like a house on fire. And this one, and rightly so, because quite honestly, they are all about kind of value discovery of what really matters to clients in a financial planning process and engagement and about their lives. And, I completely believe in that stuff. We kind of like our kindred spirits and how we believe that the industry needs to change, but just the way he delivered it kind of, broke my brain a little bit. And I need to spend time thinking about how I'm going to reinvent my process around some of the stuff that he's done. And then, other stuff, like I've got some other people like, in particular, I connected with Elements in the US, which I think is a very interesting little financial planning software tool that's out there. So I look forward to those conversations. And the ones that I've had so far that are coming up, there's some pretty exciting ones. And that's only looking at, I've only booked the first 3 months so far. So we'll see what comes out of the rest of it.
Fantastic. So do you have any last comments you want to leave to your listeners before we sign off for 2022?
No, I think anyone who's stuck around this long, I'd like to thank you for that. I sincerely appreciate the listenership. Always feel free to reach out with suggestions, questions, whatever. I'm always happy to hear from people. And other than that, I will keep doing this as long as people are interested. So,
fantastic. Well, we thank you for your efforts. I've learned a lot, and I'm sure all your listeners have as well. So, good luck, and good luck for 2023 and on.
Yeah, excellent. Thanks. So that was today's episode of FinTech Impact. Hope you enjoyed it. Hope you enjoyed the year, and hope you continue to listen. As always, if you enjoyed this podcast, please leave a review on Apple Podcasts, SoundCloud, Stitcher, Spotify, or wherever you get your podcasts. Until next time, take care.
This podcast was brought to you by Woodgate Financial, an award-winning financial planning firm catering to high net worth individuals, business owners, and their families. To learn more, go to woodgate.com. You can subscribe to this podcast on Apple Podcasts, Stitcher, Google Play, and Spotify, or find more episodes at jasonpereira.ca. You can even ask Siri, Alexa, or Google Home